Welcome back to the Cryptoviser podcast, where we talk about making money right here in the finance space, crypto, blockchain, and other news in the finance world. Hopefully everyone is doing well. Today, we are going to be talking about, I called it, but really we called it because we are a team. None of this is financial advice. It's just my opinions on the market. We're going to be talking about FTX, everything that's going on there with FTX, with the whole industry, with this new hack of funds that were drained from the FTX exchange. We're going to be talking about the impact to Cardano. We're going to be talking about $3.4 billion in Bitcoin is confirmed. And we are going to be talking about kind of how this all played out and how if you've been watching my videos, you've been prepared for this all year because we have been talking about it pretty much all year that November of 2022 would be the capitulation point or around the capitulation point. Now, when I'm thinking about markets and I give a specific date like November, it's really like around November, right? Just like last year in 2021, I said the top of the market would be around September. And it was for many altcoins, but it was November for pretty much Bitcoin and Ethereum, which was around September, right? So I'm not giving you guys exact dates, but I'm giving you guys kind of my investment strategy and my investment thesis, what I think is going on. Now, this past week, so much has gone on. It's literally like, it's felt like a year in 1 week in the crypto markets. And that's how you know there's a lot going on, right? Earlier in the year when we saw Celsius, Voyager, Terra Luna, all of these other protocols and companies going down, everybody was in fear, right? But it wasn't peak fear. It wasn't peak capitulation. There was some capitulation in the markets, but it wasn't peak fear. And I told you guys that. I said, this is not the bottom of the market. June, I do think, was the macro bottom for the markets, but it wasn't the bottom, right? It wasn't peak fear. It wasn't capitulation. It wasn't these major market events that would move the markets. And what we've seen happen this past week with FTX, that was. And again, not trying to like pat myself on the back, but we did call this, okay? I posted this video back in July. It was called FTX solvency. And we're going to get to that video specifically in 1 minute. I also posted this video in July called Is FTX Next? And I posted this on Twitter this past week. It says, just like talking about selling crypto or taking profits during a bull market, most people did not want to hear it. In January of 2022, I've told you guys this over and over. I told my viewers that I was selling some of my Cardano, most of my Ethereum, and some other things. And I was liquidating a lot of things because I saw that we were rotating out of the bull market into a bear market. Go look at my videos from earlier in 2022. And I literally had thousands of people unsubscribe from my videos. People were calling me nasty names, saying that people should unsubscribe from me. Other YouTubers who were paid shills for different projects were telling people to unsubscribe from my channel because I was selling my crypto, because I was doing what I thought was right for my portfolio. And that was a perfect example of this, right? That people don't want to hear what's not in their echo chamber, right? This is why I say, as an investor, I always look at these markets and my investment strategy as I am totally willing to change my investment strategy and thesis on a regular basis. And that's what I do. Some people are like, but Cryptoviser, last week you said you wanted to buy Solana. Yeah, well, that changed. And I still have never owned Solana. And that is a good investor, being able to take new information and adjust your portfolio strategy, right? That's what I tell all of my viewers on a regular basis on this channel. So first of all, by the way, don't forget to give this video a free thumbs up. Remember, I upload every single day of the year. None of this is financial advice. I'm not saying that I'm right all the time, because I'm definitely not. I do think that I'm right a lot of the time in my market calls, because as I've covered with you guys, we are time travelers. As investors, you're supposed to be a time traveler. You're supposed to figure out what is the most likely scenarios that could play out for your individual investment. And then what do you think is the most likely scenario? And then you investing in that, that is being a time traveler. If you believe Bitcoin's going to get to $1 million one day, you're traveling into the future and saying, okay, how can Bitcoin get to $1 million? Well, we're going to have institutional adoption. We're going to have, countries adopting it. We're going to have usage as a currency. And as all of those things happen, there's going to be more and more usage. The dollar is going to continue to be devalued. And then we're going to get to $1 million valuation. That is being a time traveler, right? It's not actually traveling through time. It's just coming up with possible scenarios and then investing appropriately for what you think is going to happen. Don't forget to hit subscribe, turn on notifications. Remember, I upload every single day. And if you think that this content is valuable, you can also click the join button down below here on YouTube to become a channel member for just 17 cents per day. If you think this video is worth 17 cents, and all of my videos every day are worth 17 cents, $5 per month, click the join button down below to become a channel member, or you guys can just give this video a thumbs up. Now, before we get to that content that I want to show you, and then we're going to get into some of the stuff that's going on in the crypto markets and how this is affecting pretty much all the cryptos, all the stocks that are related to crypto, and really what we should be doing, right? Or at least what I'm doing in my investment thesis, is I also posted this in July, right? We heard Coinbase was ending their affiliate program for a lot of influencers, and they thought that that was weird and were nervous about that. I said, I'm not at all worried about Coinbase ending their affiliate program. I'm worried about other exchanges, AKA FTX, that loaned and borrowed to and from multiple insolvent companies. Coinbase has around 100 million users, and their user base expansion peaked during this cycle already. Now, that's why they basically stopped the new investments. Now, in that video called FTX Insolvency, you guys can just type in the Cryptoviser FTX Solvency. This was from July. And not a lot of people watched this video, right? Most of my videos get, I would say, around 4,000 to 6,000, views, and sometimes more depending on, what time of the year and all that stuff. This video did not get that much views, and this is a time-stamped video for all you people who are like, Cryptoviser, how come you don't timestamp your videos? Well, YouTube is doing it for you now. But anyway, I want you guys to listen to this part of the video, because in this part of the video, I lay out for you what I told all of my viewers back in July. And if you listen to what I say in these videos, you will understand what's going on. But again, a lot of people didn't want to hear it because, yeah, but Sam is the genius. FTX is the best. Oh, there's no trading fees and all of these different things. Just like at the beginning of the year, when I said I'm selling my crypto because I believe that we're rotating into a bear market, I had all of these people saying, but Cryptoviser, this person said that we have an extended cycle. This person said that June is going to be the top. Well, June was the macro bottom. So again, like I keep saying in my videos, how did that work out? So listen to what I said back in July. Deeply concerned about FTX. I actually just watched a YouTube video yesterday by the way, I'm playing that in 1.5 speed. So a lot of people, if you, don't like the length of my videos, you can play it faster. Just click the settings button and then go to playback speed, and it will go faster. So let's listen in. These basically financial YouTubers that were sponsored by FTX. And basically from what I gathered is that FTX just recently pulled their sponsorships of most crypto influencers, which is like, why would they do that? And now there wasn't a lot of explanation as to why that was done. But then I saw this just from the end of June that FTX pulled out of LA Angels Major League Baseball deal as crypto winter bites. And you guys know I have been very concerned about where FTX's solvency is. Not because I have money on their platform. I don't even utilize FTX. But what we've talked about is that FTX, they have not been through a 3-market cycle. You guys know my new investment thesis is a 3-market cycle. Bear, bull, bear, or bull, bear, bull. 3 full market cycles before I start investing or utilizing any of these new protocols, platforms, cryptos, coins, swap platforms, wallets, or whatever. Because typically these companies like Celsius and Voyager and 3 Arrows Capital and whatever, even some crypto exchanges, they portray that they are the best and they're totally solvent and they have no issues. But when we're looking at FTX has spent a lot of money on sponsorship deals, on advertising and spokespeople like Kevin O'Leary, and all of these people were essentially paid in cryptocurrency. And then if you look at the FTX platform, they don't charge fees. And from my understanding, you get free crypto for every trade. Now, granted, it may be a Dogecoin, which is only a few cents, but how are they making money if they're paying out all of these different spokespeople and advertising campaigns and whatever? How they're paying all of them, whether it's in crypto or cash. But they charge $0 in fees. Their US-based platform has basically no volume, and their international platform doesn't have that much volume either. So if we look at just Masari, let's click on, this is very easy to see. You can do this on CoinMarketCap as well. CoinMarketCap probably has a lot more data than Masari, but you can see here, FTX has $860 million. This is in Bitcoin volume in 24 hours, where Binance has pretty much more than double that. And USDT, it's pretty low as well, 77 million. And granted, we are in a bear market, but FTX does not have that much volume, right? And they're not charging fees, and they're giving away crypto for every trade. And they're sponsoring all of these different platforms, right? This is the same thing that a lot of these other companies did, Voyager, Terra Luna. And meanwhile,
like you,
we're getting an ad hold.
Cryptocurrency.
We don't see this happening with Coinbase. We don't see this happening really with Gemini, although Gemini has gotten in some sponsorship deals and stuff like collaborations. They haven't done it to the extent that FTX has. And these companies have been around a lot longer. And meanwhile, FTX is also saying that they have about a $2 billion cash pot that they're going to be utilizing to bail these companies out. And we know that Celsius obviously owes FTX money. Three Arrows Capital, Voyager, all these companies owe FTX money. And like I was saying about, the concern here, it's just concerned that, again, not your keys, not your coins, right? You guys know, for me, I am confident in my investment thesis in Coinbase and Gemini. I believe that these are the two most highly regulated crypto exchanges in the world, highly audited. Granted, anything can happen, and these can definitely go bankrupt. Obviously, there was talk about that earlier in the year, that if they go bankrupt, customer funds are gone. But I think that these two companies, in particular, Coinbase is a publicly traded company. Gemini is very close to being a bank, essentially. They own brokerages and stuff like that. So I think that these two are the only ones that I would kind of talk about. The other exchanges, again, they haven't been through three bull bear market cycles. They have not been around that long. And now that FTX is pulling all of these sponsorship deals pretty much all at once, especially right around the time that all these insolvencies and illiquidity issues are occurring, guys, this is a risk in my view. And if you guys understand this investment world, you kind of understand what I mean by that. Not your keys, not your coins. So that is what I said back in July. I think it's really critical that you guys understand why I'm playing this video. Again, it's not to pat myself on the back. It's so that you guys understand that part of understanding investing and part of, researching investing is, listening to sides that you don't agree with, right? Why is Cryptoviser selling his coin? Why is FTX doing this? Why is Celsius doing this? And, then they went and bailed out BlockFi. And why did they bail out BlockFi? Probably because they were owed a lot of money from BlockFi as well. So if BlockFi went under back in July, guess what? FTX would go under as well. If Voyager wasn't bailed out, guess what would happen to FTX? They would go under as well. So this was all laid out earlier in the year for you guys. It was all laid out. And again, I am not I can't predict what is going to happen in the future. I can't tell what's going to happen in the future. I can just let you guys know what I'm doing in my investment thesis, in my investment portfolio. And then you guys can make your own decisions based on, that and other research that you do, where to invest. And, this is why I say all the time, echo chambers are deadly for investors, right? If you're only listening to people that are saying the same thing that you want to hear, that's an echo chamber. This is what social media is about, right? When you go on Facebook, what does Facebook show you? It shows you things that you want to see. When you go on Instagram, what does it show you? It shows you things that you want to see. And when you don't click that thumbs up on, or that like or that heart, it stops showing you that content. So it's only showing you things that you want to see, things that you want to hear. And that becomes an echo chamber. And then it essentially removes your ability to critically think about what is going on in that specific, market or in the specific, world or whatever. So there's a lot other stuff going on with FTX. This is the early draft of the assets that FTX had on their balance sheet. This is from Mini Grogu on Twitter. He said, looks like SBF was also the accountant. So this is what they had in liquid assets, $472 million in Robinhood stock, Ledger Prime, $200 million, USD, DAI, DOT, and Paxos Gold, $228 million. So just under $1 billion in liquid assets. Semi-liquid assets, these are cryptos. Serum, $2.1 billion worth. That is not liquid at all. Solana, almost $1 billion. FTT token, $500 million. MAPS token, a little bit over $500 million. Lock Tether, $500 million. And then negligible amounts of everything else. But look, Aptos. Remember what I kept telling you guys when Aptos first launched? This is a FTX product. FTX pumped. Guys, in September, FTX was looking to raise $1 billion. They were a multi-billion-dollar corporation, right? Sam Bankman had billions of dollars. He was one of the billionaires in the world. Nobody checked the books. Nobody looked at his bank account. But he was a billionaire. And meanwhile, he's trying to raise $1 billion. And when that didn't work out, all of a sudden, we have this new token that launches called Aptos, and they had 312 million. And this is just FTX's. We don't know what Sam Bankman personally had. And then in illiquid books, they had venture capital book. This was basically, VC funding $1.5 billion. I don't know what GOA is, $1 billion. Anthurial Pick, don't know what that is, $500 million. Pith, 63 million. Twitter, 43 million. Trump to lose. Guys, remember the number 2 donor to the Biden administration for this previous election cycle was Sam Bankman-Fried. He donated, I think, $25 million or $40 million just in 2022 for the midterms. And FTX, not even Sam, FTX had $7.3 million bet that Trump is going to lose 2 years before the election even happened. But anyway, the illiquid subtotal, $3.2 billion. So they're in the hole about $10 billion. And that's what we know about. And while this is all going on, just overnight from Friday into Saturday, Alameda research wallets seemingly were being drained according to on-chain data. And it wasn't just Alameda, it was also FTX and FTX US's wallets. FTX reportedly was hacked as the Telegram group admin comments on possible malware present in the app, irregular fund movements registered on-chain. Admins of the Telegram group of the FTX community stated that the platform had been hacked and all the funds of the exchange seemed to be gone. The FTX US General Counsel, Ryan Miller, who reportedly pinned the message in the group, explained that he was investigating abnormalities regarding FTX balances across other exchanges. Now, essentially what happened was there was supposedly a hacker that started to move funds from FTX and FTX US wallets into these other wallets. And then you started to see other wallets being where coins were being moved. So apparently there was a hacker that started to move funds out of FTX and FTX US accounts. And then FTX stepped in and they started moving the remaining funds to cold storage to get it safe. So a lot of money was stolen, and then some was moved into wallets for FTX to kind of keep in cold storage. But again, this timing of this is very odd, right? One day after Sam Bankman resigns and the company files bankruptcy, you have all of this hundreds of millions of dollars. And not only was it just a hack, but it was FTX and FTX US, which supposedly had segregation in their funding. Both of those were hacked, quote unquote hacked. But it's looking more and more like it was insider. Now, I don't know this for sure. And honestly, this whole situation is just a hot mess. And, it's going to be very interesting to see how this plays out over the next few weeks. Forget about from a crypto perspective. Again, my investment strategy, as I told you guys this past week, that I am continuing to dollar cost average in, my investment strategy has not changed. I'm actually sitting here like the last week and wait, did I really call this correct? I've been saying all year, 1 year from the top of the market, we will be hitting the bottom of the market at around 1 year. And sure enough, literally 1 year, November 8th or 9th of this year was 1 year since the top of the market. And that's when this whole FTX ordeal really started to unwind. Exactly 1 year. I can't even believe it. And again, this kind of capitulation event, peak fear, this is meant to paralyze you as an investor, to paralyze you as somebody who's in the space trying to figure out when is the good time to invest. So I have to in my strategy, I have to continue to say, okay, what was my strategy before this whole event took place? That this is going to be 1 year and that we're going to reach capitulation. And when we do reach capitulation, start dollar cost averaging in, start buying up at the bottom, right? Because again, we don't know when the top of the market is. We don't know when the bottom of the market is. We can just utilize the analysis of what is happening at a macro view to come up with these theses, right? So last year, I basically said that September was going to be the top of the market. It wasn't, November was, but I didn't realize that November was the top of the market until January. In January, when I realized, wait, the market is in a rotation right now. We're going down. We've had only down days for the last month and a half, 2 months since the beginning of November. And then what did I start to do? I started to sell some crypto, take profits, and everybody and their mother was saying, no, not the time, not the time. Just like what we're hearing now, everybody's like, no, there's more. We're going lower. We're going to 15,000. We're going to 10,000. We may hit $7,000 Bitcoin. It's like, so the F what? I'm not buying Bitcoin so that I can go to $20,000. I'm buying Bitcoin as insurance. I'm buying Bitcoin for my retirement. I'm buying Bitcoin for $100,000, $1 million, $10 million. So it doesn't matter to me whether we're at 16,000 or 10,000. I'm not buying I don't have money where I'm buying like 1 or 2 or 5 Bitcoin at a time. I'm just dollar cost averaging in, just like many of you are doing, right? Just extra money that I have at the end of paying my bills, I'm just, dollar cost averaging in to Bitcoin and other cryptos. And that's an important thing to keep in mind because everybody's trying to call the bottom. But remember what happened in 2021, guys. Dogecoin, everybody was, we're going to hit $1. We're going to hit $1. We're going to hit $1. And we didn't hit $1 because everybody was anticipating it. And what did the speculators do? They went in and they dumped the market before everybody could get out. And then people were still buying at 70 cents, thinking that we're going to get to $1. What happened with Bitcoin? Bitcoin, people were buying at $50,000, $60,000, $70,000. Oh, we're going to get to 100, 100, 100, 100. Everybody has their laser eyes on $100,000. We didn't hit $100,000 either. So this is all a learning lesson, I believe. And while everybody's paralyzed by what's going on with FTX, oh my God, what is Alameda doing? Oh my God, did Sam, is Sam stealing the money? And now we find out that Sam Bankman-Fried had a back door built into FTX's accounting system, allowing him to alter the financials without alerting executives and auditors. Does this surprise you? I mean, it does not surprise me at all, right? Everything about FTX was a scam. It was just a Ponzi built on top of a Ponzi. And granted, there's a lot of talk about whether Gary Gensler from the SEC is involved, whether this is deep state or whatever. Whatever, guys. This is all noise, right? My strategy has not changed. FTX is not bringing down Bitcoin. Bitcoin's not going away. More regulation is not getting rid of Bitcoin, right? Because crypto is already regulated. Everyone's saying, oh, well, crypto is going to get regulated now. Well, there may be more regulations. There may be more stringent regulations, right? But here's the deal. Many of you, I would say probably most of you or all of you, are not running your own crypto exchange. I'm not running my own crypto exchange. Maybe you have a company that's involved in crypto, right? But that's not what they're worried about. They're worried about Ponzi schemes. They're worried about scams and exit scams, creating coins to, tell you, oh, this is going to go to $1 million. And then they rug pull on you and they have all the coins and then they just keep dumping, which is what happened with Solana, which is what happened with FTT token and many of these other, newer coins. What Aptos? Like, what is Aptos? Why was it listed on every exchange? And meanwhile, Cardano is still not listed on exchanges. What have I just showed you recently about Charles Hoskinson talking about why the venture capitalists did not get involved in Cardano? It's because they didn't see Ponzonomics. They didn't see how they can get in early and then dump all their coins on retail when everybody in retail is trying to buy the coin. That is not how these coins should work, right? I don't think that they should either. I think that there needs to be fair distribution. It needs to be clear distribution so that the investors understand how many insiders got coins before. Just like when a company goes IPO, when Coinbase IPO'd, you knew how many shares of stock were going to the public, how many shares of stock the employees owned, how much the employees were allowed to sell, with their on some kind of schedule, like they were only able to sell 10% here or there, or whatever it was. You knew that. You could look that up and figure it out. That way you understood, is this a good investment? Is this not a good investment? Is this just going to get dumped and the coin price is going to go down? I mean, it did go down, but we're also in a bear market, right? But yeah, that's how the Solana distribution took place. All the billionaires got in at 50 cents. Who pumped that coin? FTX. Why did they do it? Probably for liquidity, probably for money. But like I said in my video that we just showed you earlier, it was all a scam, right? You know that song, It Was All a Dream? Yeah, it was all a scam. And that's important to understand, how these things operate. Because people watch my videos, you guys understand about Solana, because I've been saying this for a long time. But people who have Solana, they're like, no, it's not for the billionaires. It's like, then who is it for? The billionaires have been dumping, right? Who is the FTT token for? How was FTX making money? Right? Nobody asked these questions because everybody was fine. Everybody was good. Nobody questioned that Sam had a backdoor in the system. Of course he did. Of course he did. Who was auditing their code? Who was looking into their company, right? We're hearing from employees who worked at FTX and they're like, well, we didn't know anything. It's like if you questioned it, they would fire you. So of course, so this is your job as an investor, is to ask these questions, to understand what's going on, to really figure out like what is the most likely outcome so that you know whether this is a good investment or not. If there's a question, whether it's a scam, if there's a question, whether you're going to lose your money, you're probably better off not investing in that. Because again, there's 3,000 cryptocurrencies. There's, I would say there was probably about 20 regulated, legit crypto exchanges that you can choose from. So if you don't trust Coinbase, use Gemini. If you don't trust Gemini, use Kraken. If you don't trust Kraken, use Binance, right? And if you don't trust any of those, well, you're on your own, right? But there's other options. You don't have to invest. You guys know I support Cardano. I believe in the vision of Cardano ecosystem, but currently I don't hold any ADA. That is not a bad thing. I'm still allowed to support the ecosystem. I'm still allowed to believe in the crypto just because I don't own it, right? You may shop at Target or Walmart. That doesn't mean that you have to own the stock, right? Most people don't own the stock. So that's really important that you guys understand that as we are investing, because again, nothing has changed in my strategy. I'm buying. Like there's peak fear. People are like, but Cryptoviser, we're going to go lower. Okay, then we'll buy more, right? But I am not investing for $20,000 Bitcoin. I'm investing for my future. I'm investing for insurance. I'm investing. And at some point, people are going to start adjusting their strategy saying, okay, this whole FTX dump is over. We got to start buying. And listen, there's different strategies to investing. Some people believe that you should start investing when we enter the bull market, when we start moving up, because then you're just basically playing the momentum of the market. So if we go from like 16 to 20 to 25,000, then you buy at 25,000, then we go to 30, 35,000, then you sell. So you made that $10,000 in the price. Well, I get that portion. I'm not trading the market, especially like with Bitcoin and Ethereum. Like these are long holds. Like whenever I buy something, I anticipate holding it for at least a year, right? Because then it's long-term capital gains tax, and it also kind of removes the emotion of investing. Everything else outside of Bitcoin and Ethereum, just a conversation, as I've said, right? Everything else I trade. I told you guys, Polygon, I bought a very, very small portion at 80 cents. It went to $1.20, sold, went back down to 80 cents, bought, went up to $1.10, sold. Now we're back down to 96 cents, right? So I'm playing that arbitrage. Is it a lot of money that I'm making? No, like it's not changing my life, right? Because I'm not taking that big of risk, because I believe in dollar cost averaging. Slow and steady wins the race. Just like we talked about with Cardano the other day, with Cardano being a turtle, right? The tortoise and the hare. Who won the race? The tortoise, because the hare was just trying to go speeding through and was pissing everybody off. And again, back to this FTX stuff. Whether it was Sam or not, hacking this money, right? Why did the hack happen after FTX went down, right? And you're telling me that there's a backdoor in FTX, that way Sam can go and pull money out, that there was all of this fraud going on, and you believe that this hacker has nothing to do with an insider at FTX? It's nonsense. And guys, there's so much involved here, because he lied to Congress. He was trying to have regulatory capture. He lied to a lot of billionaire investors who, you would think that they would ask the right questions and look at the right books, but clearly not, right? We heard from Mike Novogratz. He said last year that he spoke to 20 of his smartest people, and none of them knew anything about Cardano. Well, clearly they're not the smartest investors, right? Clearly they're not the smartest billionaires. To him, they may be, but to me, they're not, because he was involved in Terra Luna. Terra Luna collapsed. He was involved in FTX. FTX collapsed. And, there's only so many shitty investments that you can make before people lose faith in your ability to identify what is and is not a legit investment. Right? That's why I say to you guys, I don't talk about literally the only coins that we consistently talk about on this channel. And by the way, I never tell anybody what to buy. I tell you guys what I'm doing in my strategy. The only coins that I've really talked about on a regular basis from a buying perspective is Algorand, maybe, Stellar, a lot, Ethereum, Classic, a lot, Litecoin, iffy, like there's not really that much going on with Litecoin, but I still believe in the project. Polygon, Cardano, Dogecoin, Bitcoin, and Ethereum. That's pretty much it. I mean, we talk about other coins here as well. We talk about other protocols. But my overall portfolio of crypto investments, like substantial crypto investments, like sometimes I just buy a coin because I think it's a micro cap coin and there's a possibility that's going to 10x, put a few $100s in and see what happens. But the majority of the money does not go into those coins. It goes into the big daddies, right? And I've said, if you go back to my videos of 2018, 2019, right, stick with the top 10, top 20 coins. And now my investment strategy is, like we heard in my video from July, 3 market cycles, bear, bull, or bull, bear, bull. They have to be through 3 market cycles before I really, truly believe in what is going on with them. So Sam Bankman built a backdoor to FTX in an effort to change financial records and move funds without alerting others. The other question that I have for you guys is, and we've talked about this, is Sam was trying to influence a federal bit license. Meanwhile, FTX did not have a bit license in the state of New York. Now, whether I agree with the bit license or not, you guys know I don't agree with it, right? But why did FTX not have a bit license? There's a lot of exchanges in the US that don't have a bit license because they don't even want to deal with New York. But FTX, what they were trying to do and how much money they were spending, there's no reason they shouldn't have had a bit license. And that was a big warning sign for me as well, that they're spending all of this money, $50,000 per influencers per month. Some of these YouTubers who are promoting FTX were getting paid 50 grand per month. Per month. So, yeah, why did they not have a bit license? I don't agree with the bit license. I don't like the bit license, but FTX should have had one. From what they were doing at a regulatory front and how much money they were spending, they could have gotten one. They didn't. Anyway, he used bespoke software that was designed so that even external auditors would not be notified of changes to the FTX books, according to the report by Reuters. It meant that no red flags were raised when $10 billion of funds were moved to FTX's sister trading arm, Alameda Research. He denied such a backdoor existed when asked by Reuters. He also said he disagreed with the characterization of the $10 billion transfer. I mean, your company is insolvent and has been insolvent all year. Whether it was 10 billion or 9 billion or 8 billion or 20 billion, you were trading with customer funds while saying you weren't trading with customer funds. This is the same thing that Celsius did, just on a much higher level. And a lot of people put their whole life savings into this exchange. And they're not getting this money back, probably ever. And it's really sad. And that's why I have this channel, because in 2017, there were way more scams than this. And a lot of this stuff we didn't even know about, right? And I almost put my money into some of them. But I didn't, because I was I was even scared to use Coinbase back in 2017, like petrified. I was like, oh, I'm going to lose all my money. And as time went on, you realize what the good players are doing. There's still risk involved here, but it's what risk level you're willing to take. People who use Celsius, they wanted to take the risk because they wanted the return. But to me, as I tell you guys, 12% in interest, even 17% in interest, it's not worth it. It's not worth the risk, because you could just trade the crypto and make 100%. And then that's 5 years of getting interest on Celsius with almost no risk, just trading the coins. So that's kind of what's going on with FTX. This is the FTX investments, okay? So this is a partial look at SBF's empire's investments, including lead investments in major companies. They were trying, and I think that this goes into how smart, quote unquote, smart Sam was, how connected, right? He was trying to become too big to fail. Because in the United States, at the end of the day, companies that are too big to fail are too big to fail. I've talked about this with Coinbase. I do think that Coinbase at this point is too big to fail. I don't think, even if they had a major incident, I don't think that they would be allowed to fail. That's how big they are. Maybe they will be allowed to fail, but I don't think that they would be. And I think that they have a lot of systems in place to protect the coins that they have on the exchange from a potential situation like FTX, where one person had a backdoor and controlled everything. But you never know. You really never know. And that's what it appears Sam was trying to do, because he was investing in many companies. He was creating a lot of coins. And this is the same thing that Do Kwon did with Terra Luna. I told you guys about this back in January, February, March, April of 2022. Do Kwon was trying to make the protocol so big that it would not be allowed to fail. So Terra Luna was bridging to every major crypto project out there. They were buying Bitcoin. Once they started buying Bitcoin, I said, either this is going to be a huge success or this is going to be a huge failure. And we talked about that on these videos, because once they started buying Bitcoin, that was the point. They had 80,000 Bitcoin at one point. And they were bridged to almost every major protocol out there. So if Terra Luna went down, which it did, all the Bitcoin would be sold off. That brought us to lows. And many major projects had serious issues with liquidity because of how connected they were. And not only was Sam connecting to many different projects, he was buying many different projects. So they would not be allowed to fail. Because think about it. If Sam and FTX owned Voyager, BlockFi, Celsius, and all those companies were insolvent, and then FTX became insolvent, which it was, but if it became, or it was discovered to be insolvent, that's 4 major platforms that would be insolvent. Would that be allowed to have happened? No. The other thing here is that they were investing in some other companies that were on their own, like Anchorage, Hodl Media, Impossible Finance, Lido, Masari, Polygon, Voyager we know about, Bitvo Exchange, Blockfolio. I know you guys can barely see this, but that's why I'm trying to read it out. Circle, they were involved in all of these different protocols because if they invested in them, even very small amounts, like the Masari CEO said that FTX owned like less than 1% of the company or shares of the company, that these companies wouldn't really question FTX. They'd say, oh, this is a legit company because they're investing in us. And why would you go and say like, well, maybe FTX is not doing well when they're the ones giving you money? So they were trying to become too big to fail. And they were almost there because they almost had regulatory capture in the United States. They had Gary Gensler on the hook. And now there's a lot of talk about, the ecosystem really trying to go after Gary Gensler to get him to resign, because it appears that he was not playing right. And he was about to give Sam and FTX regulatory, what's the word? Like a regulatory, I think it's called like a firewall, where basically if they continue to go and talk with Gary, they would not be held accountable for any securities issues or anything like that. Basically, they wouldn't be sued. They would be allowed to operate. And that would mean that they captured the whole regulatory system in the US. Very close to it, if not already there. And again, they did not even have a New York BIT license. This didn't raise any questions. It's so many levels to this. It's so tiring because this has taken up the whole week. I'm sure a lot of you guys have been sitting on the edge of your seat all week. I barely got any sleep this week because it's just everything. There was always something going on. But again, while that was going on, every time that I was like listening to a Twitter space or watching a YouTube video or reading an article about what was going on, I just went and dollar cost averaged, because this is all noise. Everybody is paralyzed. Everybody is sitting still while the market is selling off. And if the market does recover in the next few weeks to, what it was before this collapse, that was a great buying opportunity that everybody missed. Now, we may go lower. Well, what if we don't? What if we do? What if we don't? It doesn't matter. right? The idea here is to, just build your wealth, build your portfolio. Now, Elon Musk even commented on this whole ordeal and saga. There were some texts that they were talking about between Elon Musk and people who wanted to get involved with Sam. And Elon wrote, accurate. He set off my BS detector, which is why I did not think he had $3 billion. Again, Elon knows what it is to be a billionaire and have liquid assets, right? Have the actual cash. Because Elon didn't have $44 billion. He had to sell a lot of his Tesla stock to start getting that money. He also had private investors who helped fund the whole Twitter buyout. So he knows what it's like to be a billionaire. He knows what it's like and how hard it is to actually have $3 billion of liquid cash to buy into a company. He didn't believe it. He didn't believe it. I didn't believe it either, right? Because again, Coinbase didn't even have $3 billion in cash. Binance doesn't have $3 billion in cash. Gemini doesn't have $3 billion in cash. So how does this guy who just started a crypto exchange with no trading fees and that give away crypto and that's still trying to raise money have $3 billion in cash? And if you listen to what Sam said in his interviews, in his tweet storm, he said basically that about Binance, he's like, you won. Good job, you won. Like, that's really like being an asshole. Right. And then when they were asking him about Twitter and buying Twitter, he said, well, Elon didn't see on the same page of what we wanted to do. So we're okay with walking away from that deal. It's like, you didn't walk away from it. Elon didn't even engage in it because you didn't even have the money to begin with. And if they did buy into it, where did that money come from? From you, from the people who had the money on the crypto exchange, right? So anyway, moving on. So strong words from current ranking member of the Capital Markets Subcommittee in Congress, Representative Huizenga, is likely to lead the head of the subcommittee, which will have crypto in its jurisdiction. Concerns over political donations from Sam Bankman could ice the DCCPA. That's the bill that they were trying to release, which was FTX's main lobbying push. He wrote on Twitter, U.S. taxpayers should not be asked to bail out FTX because of the potential criminal behavior of Sam Bankman. No matter how much money Sam Bankman-Fried doled out in Washington, no bailout. And he's the 2nd District of Michigan House of Representatives congressperson. So you can see they're already talk about the no bailouts. And Vitalik Buterin broke his silence on the FTX debacle, saying the fraud cuts deeper. Vitalik said Mt. Gox looked sketchy and never tried too hard to whitewash itself. Luna too. FTX was the opposite and did full-on compliance virtue signaling, not the same as compliance. The second kind of fraud cuts deeper than the first. It's true. Sam was telling people that he is, he has a compliance team, everything's safe, don't worry about it, and it was not true. Even one day before the collapse of FTX, he wrote on Twitter, FTX is fine, assets are fine, and they weren't. They weren't. And his team at FTX was posting on Twitter, oh, look at our new Miami offices. Like peak Ponzi. And this as Cardano's impact was zero. There was no impact on Cardano. And I did a whole video yesterday called Cardano Was Saved. I would definitely recommend watching that video. It's on my YouTube channel. Just click on youtube.com/the Cryptoviser, click on videos, and you should see it right there. Or you can just type in Cardano Was Saved, the Cryptoviser. And yeah, this video, I talked extensively about how Cardano was not impacted because FTX had no exposure to ADA, no exposure to Cardano because they didn't list the Cardano crypto. And a week before this whole collapse happened, and I was warning everybody, not a good idea to have Cardano on FTX. What happened? People were begging Sam to list Cardano. And it's not even like they understood the reasons why. They just think that more people buying into, that is part of a Ponzi as well. But I'm not going to go into that whole situation. But the bottom line here is Cardano was not impacted. And I don't know why Sam and FTX did not list Cardano. This is a question for the ages. Maybe Charles knows, maybe not. I don't know. But every shitcoin was listed. Every major coin was listed, but Cardano wasn't listed. And part of me thinks that it's the Cardano community is so large and so vocal and so strong that they didn't want Cardano community putting their money on FTX, right? And I think it saved the Cardano community. The Cardano community should be saying prayers, because I'm sure a lot of Cardano community members would have put their money on FTX, would have put their coins on FTX, and it would have all been gone, all of it. And then Cardano may have hit that 20-cent price that I've been waiting for. But I don't know that we're going to hit 20 cents anymore. Now, I still haven't started dollar cost averaging into Cardano. I'm thinking about it. I'm kind of waiting to see how this all plays out in the crypto ecosystem, because that was the capitulation point, guys. FTX going down. And Cardano has not been impacted by it at all. Charles was right. The community was right. And the signs were there that they had perpetual swaps listed, which is basically derivatives for Cardano. That way they can manipulate the price of Cardano without actually listing Cardano. The technology is not that complex. And I'm not a technologist, right? I'm not a cryptographer. I'm not a tech guy. I'm an investor. So I don't know, but the technology is not that complex in Cardano that FTX, that lists all these other coins, couldn't list Cardano. They chose not to list it. They chose not to support the coin on their international platform and on their US platform. And I don't know why. And I'm really curious why they didn't list it. Because at this point, it doesn't matter why they didn't list it. I think the Cardano community is just saying a prayer for themselves that it wasn't listed, because a lot of Cardano community would have been wrecked. And the Cardano community is very big. But I really want to know why they didn't list it. Because, there were only a few coins that they didn't list. I think Polkadot was another one they didn't list. Maybe because Cardano is a huge competitor to Solana and Ethereum, and they had those two markets captured, right? I mean, FTX was Solana. Solana is FTX. You wonder why Solana kept going down over and over and over and over? Well, that's the reason. Because FTX was managing it, and they didn't really care about that because they cared about making money. And I also wrote on Twitter just the other day, is Solana going to permanently turn off now that FTX is broke? Because who was running Solana? Now they have the, retail stores. That was a huge, weird thing that they did. Now they have the Solana phone. Is that still going forward? Or are they canceling all of it? I don't know. We're going to have to wait and see kind of how this all plays out, because guys, there's just so much going on. I am so exhausted from this week. I want to know what you guys think as well. Now, a preliminary audit glimpse of token reserves of Crypto.com crypto exchange reveals that they have 20% of Shiba Inu coin. Now, that's 20% of all of their holdings. Again, they don't hold ADA. They're holding Shiba Inu. Now, listen, Crypto.com has been around for a while, and they've done a lot of the same things that we saw FTX do, right? Crypto.com bought stadiums. They bought a lot of advertising space. They started advertising with influencers and all of that. By the way, none of these crypto exchanges ever reached out to Cryptoviser to, get sponsored, which I'm a little bit offended by, but I'm also kind of happy about. I think maybe some of the overseas exchanges have, but definitely not Crypto.com, definitely not FTX. Maybe it's because the only two exchanges that I believe in and that I've talked about very consistently on this channel have been Gemini and Coinbase. And I have a regular referral link down below. If you guys want to sign up for Coinbase or Gemini, use my link down below in the description. You'll get $10 in free crypto after you trade $100. There is risk by utilizing these exchanges. But the risk, because they're regulated and licensed pretty much everywhere in the world, it's significantly less. There is risk, but it's less. So, I'm a little bit offended by that, but, I guess it's for the good, right? Because we may not have accepted the sponsorship either. I have a team that looks into the sponsor requests that we get, and they kind of do some due diligence to make sure that everything is good. And we've turned down, even up to the point where we're about to sign contracts, we've pulled out of sponsorship deals with players in the space because we just did not feel comfortable about it. Because the way that I look at it is, all of these, influencers that were promoting FTX or the fractional reserve art or these crypto IRAs, they look at it like, well, it's not really our job to do the research. Like, no, it is, because your followers listen to you, right? I always tell you guys, this is not financial advice. Do what you want to do. That's why I don't talk about you should buy this, you should buy this. I just tell you guys what I'm doing. And I know a lot of you don't agree with what I do in the market, so you don't do it either, right? I'll say, I'm not buying Cardano. And then you write in the comments, well, I'm buying Cardano. It's like, okay, good. Like, I'm happy that you're making your own financial decisions, right? But here we have crypto.com. This is their current allocation. And this is, again, customer funds as well. 20% of Shiba Inu, 30% Bitcoin, 17% ETH, 6% USDC, 5% US Tether, and 20% others. That's a lot of Shiba Inu on their platform. It's a lot of Shiba Inu. So hopefully Shiba stays elevated on the market charts. Otherwise, we may see some liquidation issues. And, MicroStrategy is also, I'm sure, feeling it. There's no sign in my view that MicroStrategy is worried about what's happening in the macro markets, right? I think that they have a very long-term view. But as you guys can see, the stock price is plummeting again, down to 175, back to where we were basically in June. Are we going to go lower? I don't know. The low for the year was 134. Listen, if we go lower, great. If we don't go lower, great. Doesn't matter in my view. I still think that MicroStrategy is a 2025 play on the, I don't see how MicroStrategy, even if they sell some of their Bitcoin in 2025, how this stock is not going to go up. I just don't see it. This is basically hedging what's going to happen in the next bull run, in the next bull market. And again, you can lose a lot of money here. So you have to be really, really careful with what you do and really understand how this market works, how much debt they've taken out, because they have a lot of debt. So if this doesn't work out the way that we think it is, this is basically going to be a total loss. But I think that there's more upside than there is downside to MicroStrategy. Again, just my thoughts and my opinions. And also, we just got the Bitfinex proof of reserves. Paulo Adorno, who is the CTO of Bitfinex and CTO of Tether, they're basically the same company. They showed that the Bitfinex holds 204,334 Bitcoin among top Bitcoin holders in the world. Now, what's interesting is that basically MicroStrategy has almost that number. MicroStrategy has 130,000. Bitfinex is holding for their customers. MicroStrategy is holding for themselves. Now, Grayscale has about 600 plus thousand Bitcoin, so they have basically triple this number, but that's still a lot. This is $3.4 billion plus in just Bitcoin that's on Bitfinex. Liquid Bitcoin is 2018. About 1,000 Bitcoin is on the Lightning Network. 1.225 million Ethereum. They're also among the top Ethereum holders. And you can look at their GitHub. And a lot of these companies that are holding customer funds are going to start releasing the wallet addresses so that you can go and look, and then these will be labeled on many of the explorers. That way, if they start moving coins or they're trading with customer coins, the community is going to know. And you can see that Bitfinex has a listed hot wallet, cold wallet. Obviously, cold wallet is cold storage. Hot wallet is what's online. And you can go and look at these on the blockchain explorers and see, how much Cardano they have, how much Avalanche they have, how much Polygon they have. And you see the flows of the money, right? Because what was happening with FTX was they were telling us that they were totally solvent, but nobody really knew where all their money was. Still to this day, nobody knows where all of their wallets. We know some of the wallets. That's how they were able to track some of these thefts that were going on, but we didn't know all of it. So we're going to see a lot more is coming out based on what's going to happen with FTX, what's going to happen with Sam Bankman, what's going to happen with all the customers and the investors. But I hope you guys learned something from this video. Again, I'm not trying to pat myself on the back. I'm just trying to give you guys the latest that's happening in the crypto world and kind of show you that we've been laying this out on the channel since the beginning of the year. We've been laying out that the bankruptcies and the solvency of these companies are something that you as an investor should question and should wonder, like, where are they getting all of this money? Where are they putting all of this money? And that's kind of my view on it. Anyway, don't forget to give the video a thumbs up if you think this is valuable content. Also hit subscribe, turn on notifications, and click the join button down below to learn more about becoming a channel member right here on the Cryptoviser podcast. We upload every day on the channel. I'll see you guys tomorrow. Invest responsibly, do your own research, and crypto on.